Well, hi there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Monday, November 3rd, and my name is Raleigh White, and I'm coming to you live from a beautiful, crisp fall day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger's going to be covering a range of important topics with a focus on seasonality. He's going to be talking about combining seasonality with technicals. He's also going to share with us when to use the 5-day and the 10-day windows on seasonality. He's going to talk about how to track seasonality across multiple assets for confirmations and his theory as to why seasonality works so well on stocks. He's also going to give us the top stocks on his watch list today, midday, and some potential option plays if they're there. And lastly, he'll answer any pressing questions that have come up in this week's mailbag. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone and we do have some ground rules. Always be kind and supportive in your posts. Keep to the topic, no political discussions whatsoever allowed. And also, folks, please keep your side conversations to a bare minimum so that the rest of us can focus on the education and the information that Roger is going to be sharing. Because after all, he's sharing time with us out of his busy day to give us an edge and to help us become more confident and consistent in our trading activities. Now, we began the day at 8 o'clock this morning, and I hope all of you were there with Roger, as you should be every morning at 8 a.m. Eastern Time for his pre-market briefing. And we took a look at what the catalysts were for today. And the catalysts are, the top ones were on the technology front. We noted that Seagate was up 1%, Western Digital was up 1%. On the consumer staple front, we had KView up 2%, and Netflix was up 1%. On the financial sector front, Berkshire Hathaway up 1%. In the industrials, Boeing was up 1%. And as far as the Fed is concerned, we have a couple of FOMC speakers that are going to be talking today. And we had the release of PMI and ISM data. Now, for those of you that are not familiar, why we talk about or focus on catalysts is because catalyst in Roger's definition is information that is known or will be known during the trading day, but is not yet priced into the market. And so from that standpoint, we need to be just aware of the impact that could happen in a sector when you've got a big S&P 500 stock, for example, like KView up 2% coming into the market, or Netflix at 1%, it's going to have an impact and a positive one on the consumer sector. Now, as far as Roger's small cap watch list is concerned, he had 8 tickers to share with us today. And you can see them here: NCRA, RNTX, MSPR, PHIO, LGCL, CHACR, CRBU, and CHAC. Now, let's just take a quick look and see how these guys are doing. And I'm going to bring up my other screen. And you can see now on this screen that I have 8 charts that are up. These are the 8 small caps. In the upper left-hand corner, we see NCRA. The pre-market high was $4.40. We can see the market opened here and nothing going on. By the way, these are 15-minute bars that I'm plotting for you here. And the next chart over, we see RNTX. The pre-market high was $3.15. It opened up here, went up a little bit, moving sideways, but not even threatening this level at this point. We then have MSPR, okay? And the pre-market high there was at 89 cents. And right here at about 10:15, right here at this point in time, we can see that the bar burst through this area. It gave us that long entry and actually went up, about 23%. So this is a nice hit. This is a nice winning trade. And I'm sure if Roger were here, he would say, hey guys, setting your profit target at between 15 or 20%, moving your stops to break even would have been a good move here. But that's a nice move there on MSPR. In the upper right-hand corner, we have PHIO. The pre-market high was 475. Nothing here at whatsoever. Lower left-hand corner, LGCL, pre-market high, $5.54. Nothing happening there. The next one over, CHACR. Now, right here at the open, we could see prices came right up here and it just about kissed the 125, the $1.25 before falling off. No fill here, thankfully, as this market then just fell off. Then we have CRBU, pre-market high, 793, nothing happening there. And then lastly, CHAC, pre-market high was $14 and nothing is happening there. So the one hit that we had today, and it was a nice little profitable trade on MSPR. So going back to the presentation here, a couple of things I want to mention. When Roger selects these opportunities, not only is he looking for price action, but he's also looking for, and this is probably the most important criteria, extreme pre-market volume. And what I mean by extreme, I mean 100 times what the normal volume for that small cap is. You also need to remember that on these opportunities, you only trade them when the market is open, during market open trading hours. And you also look to see if you can get a fill before 2 p.m. Eastern time. After 2 p.m., it's just too risky, folks. And by the way, if you ever get into one of these trades, please do not hold them overnight. It is not worth the risk. As far as Roger's pre-market stock watch list is concerned, he had 9 shorts on his list. We see them here. Okay, and once again, he brought up the charts for each one of these and gave a brief discussion on them. He also had, as you can see here, 12 longs. And of the 12 longs, there's a couple of them that have an asterisk. FSLR and Zoom, ZM have an asterisk. And Roger pointed out, he said, hey guys, if you're looking at these, don't swing these. Don't swing them, only consider them as a day trade. Now, these are stocks that are on Roger's watch list, which means that if during the course of the day, they basically hit the levels or have the setup that he's looking for, more than likely, those are going to end up being trades that he issues in the trading pit or in some of his other services. Okay, so from that standpoint, once again, this is the pre-market stock watch list, and he always is going to update those midday. Okay, now as far as Roger's pre-market comments are concerned, as he was signing off, he said, look guys, the markets are divergent. We had the Dow down and the NQ was up coming into the open. We're talking about the futures markets. He said it's a Monday, and I expect this to be a typical Monday with choppy sideways moving markets. He says there's no Fed activity of any significance, and we have earnings, just chop, chop, chop. He did note that the bonds were moving lower. And as a matter of fact, they were moving lower below the 50-day moving average. And we also noted that the VIX was rising, kind of a little red flag here. And looking at the SPY, the QQQ, the RSP, the QQQE, DJA, and IWM, it's like an eye chart. I'm going to cover my left eye now, okay? Anyway, if we look at the markets across the board, they have retraced, and they were just consolidating, and he just expected them just to remain in this consolidation mode. He also pointed out on the momentum side that 60% of the stocks in the S&P 500 are below the 50-day average, and 46% are below the 200-day average. And he said, guys, look, don't freak out here. This is I'm not suggesting that there's an upcoming crash coming or anything like that. He says, look, this is essentially a consolidation after a retracement. Let's just keep an eye as to what the bond and the VIX is going to be doing, but just don't freak out at this point and stuff. It is a consolidation after a retracement. Now, looking at today's agenda again, once again, the focus today is going to be on seasonality. And he's going to be talking about combining seasonality with technicals. He's also going to share with us when to use the 5-day window and the 10-day window when looking at seasonality opportunities. In addition to that, he's going to show us how to track seasonality across multiple assets when you're looking for confirmation. He's going to give us his theory on why seasonality works so well. And he's going to give us the top stocks he sees at midday and maybe some potential option plays if those opportunities are there. And lastly, folks, he's going to answer any pressing questions, that may have come in over this weekend in the mailbag. Now, once again, folks, if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Also, remember, folks, that the chat is open to everyone and we do have some ground rules. First of all, always be kind and supportive in your postings. Secondly, keep to the topic. Thirdly, no political discussions allowed. Fourthly, keep your side conversations to a bare minimum so that the rest of us can focus on the information and education that Roger's sharing. Because think about it, folks. He's sharing time out of his day to give us an edge in the markets and to help us become more confident and consistent in our trading activities. And so with that, folks, once again, let's welcome Roger and Matt to the room. Gentlemen, how you doing? You're in your new digs, right?
We are definitely in our new digs. That's right. We are hanging out here. It's our second day here at the new office. So far, so good. Nothing to complain about. What's really great is, as I mentioned, we don't have to use these overhead lights. I imagine you could see me pretty well, and
Yes. Yeah.
not using any. I'm not using any excessive lights except for the ceiling lights, which is pretty remarkable. Still can't believe we're doing that, but it makes it much more cooler in here. Now, as far as the market's concerned, and it only takes me 6 minutes to get to work, so I could actually hang out with the folks. I
Roger,
could,
that's quick.
yeah, that's including leaving my subdivision. So, the boys did everything possible to make it as convenient as possible for me, and I really appreciate that.
Excellent, Roger. Well, I know in your closing comments, you basically said it's a Monday, it's a chop fest. I expect consolidation. And don't freak out, guys. Don't freak out. We know that there's no momentum in the market. I'm not suggesting there's an impending crash coming, but it's just, it's a consolidation after a bit of a reversal. And those are things that you predicted would be healthy and normal for the markets to do, what we're seeing. And from that perspective, Roger, any surprises this morning, or are things basically holding true to course?
Well, you remember this triangle we talked about this morning?
Yes.
And see the 8-day EMAs right there?
Yeah.
I mean, we literally. I said we're
Maybe,
probably.
yeah, Roger, if you took the box away, the market would be just crashing higher. I know. I just would be moving higher. You're keeping everything in the box.
I did draw this box in the morning today, and
Yep.
there was a lot of people there, and it doesn't look. Yeah, the color lighting could be better. I got to switch the bulbs to yellow to white from yellow. Some are yellow, some are white. Matt's going to take care of that. But yeah, the color balance off. But you know what? I'll take the color balance off with and trade it off for the heat any day of the week.
Yes.
All right. So as you guys can see here, this is exactly what I expected I said it's going to be a Monday. We're not expecting a lot here. We don't have a strong momentum either upside or downside. Um, coming into today. The interesting thing right now is the market is starting to it's going to start, you'll see in a few minutes, it's going to start getting a little more bearish. This is the SPY. You could see it right here. That's the SPY. And this is the VOLD right here. And look at where the VOLD is going. It just made a new low. And market breadth is slightly bearish. We're in 787s. And the bonds are near the low of the day. So I'm expecting the volatility to start coming back up. Funny enough, if volatility comes up, look at this trend. It'll be a nice little uptrend here, aligned.
Mhm.
And the SPY should start coming down precipitously in the next, I don't know, 10, 15 minutes. How about that for projections?
I tell you what, and the market internals don't lie.
No, they have no reason to lie.
No, these are the facts.
Volume is coming into declining issues. We're negative 721. And I'm not suggesting we're going to like fall apart or have a crash. I'm just saying that the SPY should theoretically come down and kiss or the VOLD will come up. But usually, as I say, about 80-90% of the time, the SPY follows
Follows the money.
VOLD. Yeah.
Yeah.
Matter of fact, I wanted to see right now if we still have I want to see if we still have divergence. One second, real quick here.
And one of the things while you're doing that, Roger, we had 8 small caps that you issued this morning, and one of them actually did hit and gave us a nice little 23% pop.
Oh, beautiful. That's good to know. See, I completely had no awareness of that at all. Those are the best surprises.
Yes.
So another one hits. Good. Matt says I hit that one. Okay, good, good. So
Yeah,
this is
it
what I
was MSPR. Yep.
let me take a quick look at that one. Oh, that was the funny enough, that was the last one on our list.
Yeah.
MSP, the lowest one on my list. I see I have it all the way at the bottom here. MSPR. You just don't know with these, you know? You don't know. You got to just continue. You got to just keep it's a formula, you know?
Yes.
And I'll explain it. I'm not going to get into it right now, but it's a formula. And folks, get those freebies, get those small cap freebies while you can, because between not in November, but sometimes around Christmas, I'm going to launch a small cap service. And all those trades you guys are getting right now on the house, that those are going to be premium trades. Obviously, I'm not going to give you all this lit. I'm just going to give you alerts when they hit, but it's going to be very similar methodology, and it's been working, as we all could see. It's been working tremendously well. Okay. By the way, we hit 800 people this morning, Raleigh, on the Telegram, on the YouTube channel.
On the YouTube channel.
Yeah.
Outstanding. On our way to 1,000.
On our way to 1,000. So, folks, this is what I do not like about the market today, and I brought this up in the morning show. You see this divergence when you have, and there's a lesson here. You see how it's down 200 points, and the Dow and excuse me, the Nasdaq futures are up 100 points. Typically, one of these will win, but that's besides the point. The point I'm making is when you have this, think about how many stocks are overlapped in both of these indexes. So what happens is you have a lot of this. You have a lot of this choppiness, this because some are buying and some are selling at the same time. It doesn't create synergy between blue chips and technology. So and now the secondary point is usually, not always, but usually. When I say usually, I mean with odds, mathematic odds. This right here, they will, one will win over the other. In other words, the Dow will continue dropping and take these with them, or these will start going up and take the Dow up with them. Usually, not always, but usually that's how it resolves itself. But trading on a Monday in this type of an environment is very, very dangerous because look, blue chips are going down, small caps are going down, Nasdaq is going up because of a few stocks, not because of many stocks, as you could see by QQQE, which actually doesn't look bad, but it's not positive on the day. This is where you're getting the juice from, right there, the mags. Okay, the mags, which are getting their juice from this right here. And if you think Amazon is going to stay up here without coming back down to its mean, to its, I got some ice cubes to sell you. You know what I'm saying? Let's go to Alaska and let me sell you some ice cubes. Okay. All right. That's enough of that. So, what are the things I want to talk about? I want to talk about combining. Well, Raleigh actually mentioned them pretty well. And greetings. Hello, everybody. Thank you for being here. I don't mean to get off on that start without greetings, but I just want to get through a lot of stuff today. Now, I want to explain to you, I want to give you a couple of things here, okay? And I do have a couple of seasonal stocks, a lot of examples. This is going to be a red hot session, okay? We got some time here. Hey, John, good to see you. Hey, Don, good to see everybody. Thank you for being here. I do appreciate all of you. I really do appreciate all of you. So the reason I want to explain this to you in a real good detail so you understand, okay? There are hedge funds in the market. And then there are hedge funds, they trade long, they trade short, they trade side, they do diagonal trade, they do any kind of they do pretty much what we do. Nothing is off limits for a hedge fund, okay? Unless it's a very specific hedge fund. And if they violate those rules, Kathy Woods, that's a whole different story. I'm not going to get into Kathy Woods.
Did you just give us an aside?
On the side, Kathy Woods, I'm
Yes.
not even going to get into her right now. Oy
Okay.
vey. That Kathy Woods. What a troublemaker. Anyways, um, but what I do want you to understand is this: there are hedge funds, and then there are pension funds. Okay, pension funds are really, really big, and they're not trying to make money. What? They're not trying to make money? What do you mean they're not trying to make money? Everybody's trying to make money. No, no, they're not there to provide money. They are there. They are there to provide liquidity, liquidity for the market. Their job is simply to take somebody's money, put them into that stock, take as combine as many people as possible, put their money together, put that money in a stock in the fastest way possible without disturbing liquidity. In other words, they want to provide liquidity for all the other players. They're not trying to move the market. Hey Omar, how are you? Good to see you. So I want you guys to understand the difference. Hedge funds are looking for alpha. They're looking to outperform the market. Pension funds, these huge pension funds, they don't do anything to beat the market. They are the market. They're simply providing liquidity. That's all they're doing. As a matter of fact, the biggest wrong they can do is to create a wave and move the market. Because if they do, it's going to make their jobs harder. They're not going to be able to execute at a favorable price for themselves. Okay? Hey Sylvia, Omar, everybody, welcome, and thank you for being here. So, what's going on with these funds? And by the way, these funds are the market. They are the backbone of the market. They are the big backbone of the market. Um, so so the way the why does seasonality work in stocks? The reason seasonality works in stocks is because these huge pension funds, they do things on a specific time clock. We don't know the reason behind their time clock. It could be due to old habits die hard. It could be due to Y2K. I'm not kidding. I'm serious. It could be due to, but they don't change things. Let me give you an analogy. You know how people have habits, they do the same thing. It's the same thing for people that run these funds. And the reason they don't have to worry about any repercussions is because they're not trying to game the market. All they have to do is keep doing what they're doing quietly, and they're doing their job. Their job is to put you into a money market fund is a good example. Okay, big pools. Okay, so I want you guys to understand why these seasonal periods work. So a lot of times when somebody asks me, endowment funds, yes, exactly, Christopher, that exactly. A fund of funds, a S&P tracking fund, a fund that's just trying to track the S&P. All of these funds are just a vehicle for people to put passive income into. They're not there to outperform the market. They're there just to be the market. You understand? They're not looking for a 30% gain. And I want you guys to understand, I know we're looking for something different, but 98.4 or 98.5% of investors are just looking for that. So that's where most of the money is. It's not and nothing I'm saying right now is like eye-opening. But you see, why do certain stocks go up during certain time of year? They go up during a certain time of year because institutional funds buy or sell those stocks at that time. Let me give you an example, okay? Example. You may want to write this down. Okay. So I asked Matt, Laura, none of them are day trading. There are no hedge funds to day trade. They're too big to day trade. Too big to day trade. They can day trade currencies, ETFs, but individual stocks, unless they're like Tesla, and those they don't really day trade very much. They don't. Too big. Think dinosaur. Okay, the way I explain it to you guys is this. There are three, imagine this, there's three type of animal mammals in front of you, okay? There's the Raleigh, you're gonna help me out here. I'm really bad with these names. What's the little one, the real pesky one that turns fast and wants to kill everybody? They're always fighting around.
Velociraptor. That would be the Velociraptor.
Yeah. See how fast they could turn? Okay, what's the one that is really big, like an elephant and that eats plants?
Brontosaurus.
I don't know how you remember all this stuff, but thank God one of us does.
Grandchildren.
Grandchildren. Ah, the grandchildren card. Yes, I'm not there yet. I'm about 10 years. About 5 to 10 years away from there. I hope. We're not there yet, but I got you. I'm like, how does he remember this stuff? Grandchild. Of course. Makes perfect sense. You know, I used to know all this stuff when I used to watch the Jurassic Park 30 years ago too, but okay. So I want to show you guys this. I can't believe we're already in November, Matt. You know that?
That's crazy.
I just looked at this and I said, wow, November, where did the year go? So November, the first week or two, this is a 10-day hold, Matt?
Yes.
Yeah. So the next 2 weeks, the first 2 weeks of November are really bullish for healthcare. Okay. They're really bullish for healthcare. Now, don't ask me why they're bullish for healthcare. I don't know why they're bullish for healthcare, but they're bullish for healthcare. And you see, it's not just one stock, it's three healthcare stocks. Now, look at this. This is 17 years, this is 19 years, and this is 24 years. And this is this checks it for every quarter. And you could see the percentage of time it made money during this period of time. 88% of the time, 84% of the time, 75% of the time. You could see it right here. Here's the profit factor, which is fantastic. The number of years. Now, why can't we go further? Because there is no data going back further for these stocks that's worthy. We go back 30 years. But my point is that we don't ask why. We just follow the money. And what I wanted to show you is sometimes we could track multiple assets and get a confirmation. Now, how can you use this information? How do you use this information? Well, there's several ways you could use this information. The first thing you could do is not take any shorts in healthcare first 2 weeks of November. That's the first thing I would do. So let's say you're hanging out, and let's say you're sitting there, and let's say you're looking to take a short in your favorite healthcare stock, and you run across this study right now. You probably shouldn't do that. The tailwind is not in your back. It's not on your back. Okay? It's just not right now. It's not. So, I mentioned to you guys before that this makes it really, really easy when you see 1, 2, 3 healthcares all doing the same thing in the same period of time over the last, say, on average 20 years, give or take, and the healthcare index is confirming that. What does that tell us? That's telling us we're getting some tailwind to the upside. Okay. So we have this data. We clearly see we have a seasonal tailwind in our back for healthcare. How do we use this? Okay. How do we use this? Well, we use it to look for longs. How would I look for longs? Well, the first thing I would do, here, let me just move this. Just move that here. The first thing I would do is, let's look at XLV. Okay, XLV is below the 8-day EMA. I don't like that. I need to find stocks that are above the 8-day EMA that are looking good. So let's see if any of these stocks do. And I haven't screened them. I'm just looking up right now. Well, look at this one. This one, hits off the 15, And it's now coming back through the 8-day EMA right here. That's very, very attractive for me. Stocks that hit the 15-day and now are coming back and are gaining relative strength on the market. That's very, very attractive for me. So I would definitely keep an eye on this stock. So we have a stock that has seasonal propensities, right? Seasonal propensities. Let's check something. And at the same time, Matt, how many are on YouTube right now? Can you give me a number? I'm not on YouTube real quick.
Yeah. There are 78 people.
Thanks. So again, hey, Ivana, how are you? So you see how we bounced off? Now, if we were above the 8-day, it would be even more attractive. So we have a stock, we have seasonality. We have seasonality right here. Do we have liquidity on the options? First of all, earnings are coming out. Yeah, we still have time with earnings. Option chain. They're not bad. We can work with limit orders. We can make it work. So before we get too ahead, we have that. We have that. Do we have a trend? Yeah, we do have a trend. I could tell with my eyes. You guys can come and you guys can use what was that stuff? You can use the ADX. Hold on. See how well we're trending here. ADX. And by the way, the data miner software has all of this built in. Okay. 29. What do I always tell you? If we're above 20 and we're below 40, we're in the game. And I always tell you, I don't care if it's going down or up. If it's above, if it's a 29 and going down, it still means it's trending very well. That's why I have these little lines here, 20 to 40 right here. That's okay. So, and by the way, data miner gives you this automatically. So I wanted to show you how we find the stock using seasonality, which data miner gives you at a click of a mouse. We find the stock that's trading in our pattern right here, coming up, and we find the stock that's between 20 and 40 to make sure the stock has some trend to it. Hope you guys understanding what I'm saying here. So far in our analysis, does anybody have any questions? So far in our analysis. So you got your tailwind, right here. Let me know if you guys have any questions. Oh. Hey, there's that SPY. Let's see, I don't have my internals right now. But any questions? ADX, yes. That's what I thought I said ADX. If I did not say ADX, I apologize.
Yeah, and a number of people also commented, Roger, that with open enrollment going on at this point in time, they're not surprised, for example, that there's seasonality on these stocks.
Okay.
But as
Yes,
you
Iris.
said, at some point in time, we don't care why it is. We just know the data is there.
Right. Yeah, the ADX, the 10-day ADX. So, and it looks like the SPY, I don't know, it looks like they're starting to. Let's see what happens. Okay. So basically, it seems like everybody understands this part. So folks, what you need to understand is it's not just one thing. It's several things together. It's this right here. Start with the tailwind part. Check the stock to see if it has the ADX. Check to see if it's trending. Make sure it's above our specific area. And in this case, it's above the 15. I would prefer it to be about 147.30. And remember, this is a 2-week. This is for the next 2 weeks. So this is pretty, we don't have to rush, is what I'm trying to say. You can line these up. There's tailwind for 2 weeks. For 2 weeks. Okay. Now, I explained why I believe. The next part. When do you use the 5-day? When do you use the 5-day? And when do you use the 10-day? That's a great question.
It is a good question.
Yep. Yeah. That's actually one of the questions. That's okay. So if you're looking for if you're not one of those people that sits and watches the market all day, and I know a lot of you are actually, which ironically is true, but and you like it that way. But if you're one of the folks that does not watch the market all day, you should stick with the 10-day. You should stick with the 10-day. It's more for the swing trading period, the traditional swing trading period that lasts about 2 weeks. About 99% of our trades are closed out within 2 weeks, I would say. Maybe not 99, maybe 90. Um, what about if you're day trading or if you're trading 2, 3 days more aggressively? For those, I would suggest looking at the 5-day, but it never hurts to have a little extra time on your back. The best is when you can get the 5-day and the 10-day to cooperate together. Basically, if you, it's, in other words, the 10-day is always give yourself that extra time period and you'll be in better shape. But if you're strictly a day trader or you're looking very short-term windows, the 5 days are fine. Those 5 days, 5 days. That's a full week of price action. That's more than enough for most folks. I would say in the pit, I can count probably on one hand how many trades we've held beyond 5 days. It doesn't happen very often. That's out of 400 something trades. So that's how you would deal with that. Okay, that's how you would deal with that. Now, I'm going to go through some stocks. I've got some stocks that I want to go through right now, and I'm going to give you guys some debit and credit spreads. And then I'm going to answer some questions from the mailbag. Okay. How about that, Raleigh? Does that sound
That's
fair?
sounds great, buddy. And once again, Roger, what I like what you did is you said on the agenda, you went from the seasonality picks, you showed how you combine technical factors with that ultimately leads you to what is the best opportunity to trade.
Yeah. And by the way, let's just stay on this topic for another minute. This healthcare seasonal topic. Now, we looked at A, right?
Yeah.
Okay, but we didn't look at MTD and VTRS. So just MTD. Okay, MTD looks just as good, actually. They look like they're tracking each other. You could see right here.
Hmm.
They both look as good. Which one do I like better? Man, they look really similar. Like they look as similar can be. Um, that's a good question, actually. Hey, Robert. Um, I like A better. Well, let's look at volume 506 MTD. Yeah, definitely because you're yeah. Your options are going to be crap here. There's no liquidity here. Now, in terms of VTRS, that actually looks really good, but it's a cheap stock. So I would be that's a low price stock. It doesn't have as much institutional accumulation. But ironically, in terms of the charts, this one looks the best. Except I would never day trade this because it's very, very wicky. But look at how well it's holding it's already above all of these levels here.
Hmm.
And it's making, so technically, this is the best one out of all of them. Folks, do you understand why this is the best one? Look at the chart. Look at A. Forget about that it's a $10 stock. Just look at the chart. Look at A and look at VTRS.
Yeah.
Do you see that? See how it has a very shallow pullback. It's respecting the 8-day and the 15, and it's already above all of this.
Hmm.
It's already above it. It's already above this price level, whereas MTD is not, and that's a problem because that's a high volume candle. And the reason I like A more is because this is not a high volume candle, so it's easier to overcome than this. Oh, sorry, what is it? MTD. It's easier to overcome than this.
Okay.
Everything I teach you guys, and if the way I just explained it to you, is this is all examples, Arthur. This is not for you to buy or sell. I'm trying to teach you how to read price action. I said don't look at the price of the stock, which is why I said ignore how much this stock costs. VTRS, $10 stock, but I like the chart. So just look at the chart. Well, the same thing would apply to, I didn't even know till you just told me how much it costs because I'm not looking to take any of them. This is a hypothetical example. Okay. So, again, MTD has a high volume bar here, and it takes a lot to overcome that. Okay. And it has low volume. Whereas A does not have a high volume candle, which means it's easier to overcome. It's more liquid. And thank you, Arthur. It's not $1,000 stock, but that was not part of that equation at all. But both better than all of them, except for the fact that it's a cheap stock, is where's that? VTRS, which is already trading above all of these price levels, which makes it very attractive. The only problem is it's a cheap stock. And cheap stocks have the same problem as expensive stocks. Wild Ranger, I think it's 25% above the 50-day average volume makes it a high volume candle. Like right here. See, it's trading about 25%. I don't remember what Matt put the formula in. I don't want to lie to you. Let's see.
And that's on TC 2000, I think it is,
Yeah.
right,
Do you remember
Roger?
do you remember what it was, Matt? 20 or 25%?
It's 25%.
25. Yeah, I think it's 25 too. So if the volume is 25% above the 50-day average volume on a daily chart, it does that.
And can you do that in Thinkorswim,
You
Roger?
could do,
Or
of course, of
change the
course.
bar weight? Yeah.
Absolutely. You could do it in any, yes. Absolutely.
Perfect.
This is not, that's not, yeah. I mean, we're talking about some of the most oldest tools. This stuff is not.
This goes back, yes.
Yeah, this goes back. Yeah, it goes back. This stuff really goes back. Okay, so let me show you stocks that I'm looking at right now, and then I'll talk a little bit more about seasonality, because a lot of people have been asking me. Seasonality seems to really work well, right? I noticed that seasonality tends to work really, really well between November and February, and between May and July for some reason. May and August. I don't know why, but it just those periods. Probably because there's a very strong seasonal summer effect and a very strong seasonal winter
fall
effect.
effect. Yep.
Yeah. It's 50 days. You could see it right here, guys. This is the 50-day average volume. Moving average right here. Moving average. This moving average. It's 50-day right here. Moving average. That's all it is. There's nothing. There's no no miracle hanky panky.
Oh,
voodoo. Nothing like that.
Yeah.
What blows my mind away is I look at some people's chart. People send me charts all the time, and I see them, and I can hardly ever see the price action. And I'm thinking, man, you should just take away all that stuff and just look at the price action, and you would see so much more. But people don't want to listen to anything I say. People take the path of least resistance. Interestingly, Vold is not coming up. Look at this. Vold is not coming up.
Yeah, they remain divergent. Yep.
One of these is going to win. One of these is going to win. Vold is not coming up. It'll be interesting to see which one wins. Okay. All right. Let me give you stocks that I'm really looking at right now very aggressively. You guys are you're gonna like these stocks. Let me just check something here. ANF. That's a very nice short right there. Okay. If I was looking at this short, I would be looking at about 25 days out. About 68 delta right here, 73 put. Nice short. My stop would be somewhere right about there. AbbVie with a target of the 100-day moving average right here. Stop loss right here at the 50-day. In this case, I would go 11 days out, and I would buy the 112 put and sell the 110 put against it, and I would do this for $1.25. Now, why would I do a spread here even though these options are cheap? Because the implied volatility is really high. That's why. Implied volatility is really high. Okay. This is what did he say? We just had the medical is strong now, or what is he talking about? Talk about seasonality? Yeah, this stock has been bucking the entire trend. This stock doesn't have strong seasonality. I'm talking about a short, very short-term trade, possibly a day trade here. Yeah. Nike. Nice breakdown here. Consumer stocks have not been doing great, by the way. I would be looking about 25 days out, 74 delta, 66 put right there. DJT. Please, folks, this is a technical breakdown. It's not a political anything. Don't go sending me emails telling me I'm anything. This is just technical price action. Right here, 78 delta, 16 put right here. CTVA. Nice pattern on it. I wouldn't be touching it today. Oh, it has earnings. Forget it. I wouldn't be touching it for a while.
So we dropped that from the list, Roger, CTBA?
Yeah, we dropped that from the list.
Okay.
Charter, we want to go about 25 days out. We'll do a spread on this one. We'll go about 225 put versus a 220 put for 225, $2.25 or less, and not a penny more. And last one, CarMax. I like CarMax. I like how it's breaking down this channel right here. You don't really have much of a choice here. They don't have monthlies, so you gotta kind of play with this. You got 18 days out, 70 delta, 42.50. Does not look good at all. At all. Okay, let's look at the long side now. I mentioned this in the day trading in the pit today. I really like this stock. I'm looking for a pullback to go long. As a bonus, it doesn't really fit our criteria, but I really like how strong it's been all day and how very nice look to this stock. Probably go about 18 days out, 13 put right here, November 21st. Tesla. I still like how Tesla looks. Remember, I told you guys I never give you a day trade without it being a nice swing trade. We made money twice on it last week. Oh, I'm in puts. Hold on. Let me go to calls. I'm in the wrong. Yeah, I'm in the wrong neighborhood. Lumen. They're 18 days out. 10 calls. 10 calls. I'm on the wrong side of the station. Right here. Tesla. I'd go about 11 days out, buy the 470 call and sell the 472.50 put for about $1.25. Make some money if it goes up to 74, 76. BE. We made money on this today, Raleigh. We had a trade in the pit. I got a couple of nice emails. Karen the Shark sent me an email. A couple of other folks made about
Terrific.
15. Yeah, I made a couple of bucks on this today. I still like the stock. I wouldn't swing trade the stock, but I do like it for a day trade. Okay. Zscaler. Zscaler. Not overextended yet. Nice looking stock. Go about 25 days here. About 73. Oh, too expensive. 335 call to buy and to sell the 340 call against it for $2.50. Okay. You're right, Stacy. They do have a board meeting. They do have a board meeting. HTHT. This one I got straight off of the scanner, the ProTrader dashboard scanner earlier today. I like this stock. It's not liquid though. You're not going to get it off. No, we're going to skip IBM. Goldman Sachs. Goldman Sachs is actually looking better than most of the financial stocks right now. It's got some upside. For this, I would probably go about 11 days. No. Yeah, about 11 days out, I would buy this 795 and sell the 797.50 for about $1.25. About $1.25. Okay? About $1.25. Now, let me answer some questions from this week's mailbag, okay? Roger, do you use, I'm just pretending that you're sending me a letter right now. I'm not talking to myself. I'm not that crazy just yet. But Roger, what do you use seasonality for all of your analysis? No, I like to use seasonality for stocks that I plan on holding for more than 72 hours. I don't really like seasonality in very, very short term, but I love seasonality for swing trades. So traditional swing trades, seasonality is really, really great for that. Okay. That's question number one. Question number two, does seasonality work to the short side as well as to the long side? To be honest with you, I think seasonality works better to the short side than it does to the long side. I have no idea why. Well, I think I know why, but I can't see if I can't prove something that I don't want to make any claims. But my theory is because when institutions sell off stocks, when they liquidate stocks, it's much harder for them to control the order flow from the other side of things. That's all I think it is. I think it's just they're not as good as selling as they are buying, because they buy on dips, but when they're selling, they tend to sell off on breakdowns. So the downside moves tend to be more aggressive. Okay, tend to be more aggressive. All right. Let's see. Oh, yeah. How far typically do I like to go on options when it comes to seasonality? Well, if the seasonality is for 10 days, you want to give yourself a little more breathing room. So typically, whenever you're using seasonality, you should be looking for stocks, for options, excuse me. You should be looking for options that have more or less 3 to 4 weeks till expiration. That would be my suggestion for you. That time period would be a very, very good suggestion, in my opinion. Let's see. How do I use seasonality for straddles or strangles and all those things? I don't. Another very good question. I don't do that at all. Typically, for those type of trades, I look for disparity and volatility, which is more of a mathematical equation than a seasonal equation. Seasonal, 99.99999% of all seasonal trades are actually just typical swing trades that are like A-line type of trades or breakout trades that have a window of about 2 weeks or less. So I don't do anything fancy with them. I don't use them for back spreads. I don't use them for straddles or strangles. Those are all situational volatility type of trades. You don't want to mix and match. It's one of the big mistakes. If I say something, notice I've been talking about daily charts this whole time. Everything we're talking about is applying to a daily time frame. I think I just answered that, Cyrus, right when you asked. No seasonality, no seasonality for day trades. I've never once. It's a good question of whether it works or not. I've never even thought about it. So too short of a time frame. All right. So, Raleigh, do we have any questions before we move on to the next segment?
No, I think you basically answered everything that were there. There were some, specific questions about, your charts and what you looked at and the technicals, et cetera. But as far as that's concerned, with the questions in the mailbag and the questions that you addressed that came up, we're good, brother.
All right. Folks, I'm going to give you some education about seasonality right now. I highly, highly recommend you take notes and you write what I'm going to say, because a lot of times I will find that folks will have a very similar question to what I'm teaching you. Now, why should you listen to what I'm about to tell you? First of all, I'm going to close the chat. Raleigh's got you guys covered. I'll come back in about half an hour.
Yep, and we need
Why?
the folks in the Zoom room also need to come over.
You mean in the
YouTube.
YouTube?
Excuse
in
me,
the
people in the YouTube room. Yeah, I want to make that need to
I-
come on over to the Zoom room.
I did that last week, I think twice, Raleigh. This exact same thing. We got too many apps, man. We got the Telegram, the Zoom, the Slack, the
Teams.
Teams. I mean, it's just too many apps. Too many apps. That's so funny. I guess I'm not the only one that does that.